Good morning. This is Ron Brown. It's January 24th, 2024. It's a little after 10 in the morning Central Time. I was going to do a live session this week, but I've got several things to cover, so I thought it would be better to do a video just because I don't want to get distracted by questions and so on. So I'm going to do a video. At some point, I'll get around to doing a live session. Maybe we can do a question and answer session about what I'm going to cover today. So this is a continuation about money flow, and then I have some new scans, VPA with high volume scans, and I'll explain all of that. Just as usual, I'm going to read this. Any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. If you're not using HGSI, you should. Just go to highgrowthstock.com and click on the free trial, and you can get a 30-day trial without entering a credit card. So there's absolutely no risk, and you'll get my files so you can follow along with what I'm doing. Now I'm going to begin this video with the way I began the last video. I'm just going to take a look at my analysis today of the NASDAQ. You should always have an idea of what the market's doing, which is a pretty obvious statement, but most people form opinions or read what other people are saying and so on, and you'll never get ahead if you rely upon other people's opinions for market analysis, and that's including my opinion. I do this for myself and for HGSI users just to show what can be done with the program, and I try to incorporate volume price analysis and Wyckoff indicators and so on. But this is the way the market looked as of the close yesterday. Notice up here this arrow points to this dark green arrow, which means that accumulation is A. If you move over here, you'll see that I have an arrow pointing to that. And yesterday the volume was above average, the spread was narrow, and the close was very high. And you can see that right here by looking at the candle. This was a hesitation the day before, but as I pointed out, and I'll just flip to it quickly, even though that hesitated, this is the day before. Look at the money flow slices to confirm the strength. 748 in money flow up versus 249 in money flow out. So it was a very strong day the prior day, and we saw a continuation of it yesterday with the open about where, well, it was a gap open, and then it closed near its high. You just look over here and see at the daily range, close was 93.26. What does that tell you? Tells you there's still strength in this market. And the internals were pretty even, a little bit negative, not much though, and not enough to be concerned about. New highs were more than new lows. They did turn down, but still plenty of strength, just a little bit of hesitation. And then Netflix reported after the bell last night, which drove the futures up today, and they remain strong. The market is continuing up. My conclusion was that all trends remain up, and if you look over here, you'll see that the random walk trends are up, and the VPA trends are the best fit trend, up, up, up. Everything is up. Yes, at some point it's going to turn around and correct. It could be today, but I shouldn't say correct, pull back. We have to wait to see if there's a correction or not. But look at this volume down here. There are actually these were down days here, but here, beginning with this day with a big volume spike on the blue bar, 1, 2, 3, 4, 5, 6 days of above average volume, and I imagine today's going to be another day. So there is strength. The money is coming into the market, and it's very positive right now. If you've been following me, you know that I've been putting a lot of emphasis on money flow, and I'm using it in my analysis. I didn't really cover that when I was looking at the end of day chart, but it really shows us what's happening in the market, both at the end of day and intraday, and I'm going to cover that right now. I'll bring up my quick pick. Whoops, sorry. Wrong thing there. Have to click on the finger here. And I'm going to talk a little bit about money flow end of day, and then I'm going to talk about money flow intraday, and then I'm going to discuss these experimental scans that I believe I mentioned before. If not, I'm going to cover these in depth. And what these do, they look for stocks that have had a strong volume spike at the end of the day, and there's a 4-day window looking back 4 days for a VPA flag to see if there was one. So those are the criteria. But before I get to this, well, actually, let me talk about this just for 1 second, because what this does is it looks for stocks that had a above average. If you look here, you can see it's above average. It's above the blue line. That's a 90 period simple moving average line. There is a VPA flag right here, which is strength seen returning after a downtrend, and then it generated a green bar because those two criteria were met. Now this one isn't following through today. This is a little cheapy stock, but this is the criteria, and this is a chart I'm just going to leave up here. You can locate this chart if you go in to the undercut and rally, or the UNR and visual filter backtest charts, and I'm using chart number 10 here. What this chart does is it generates a green line when those criteria are met, when there's above average volume and there is a VPA flag within 4 days. And you can see that happened here, it happened here, happened here, happened here, and it happened here again. This is not really a stock I want to feature, but it just happens to be at the top of the list right now. So this chart I'm going to be using because when those conditions are met, these green bars are generated, and I'll point that out. Now these other visual filter backtest charts take the filter from the warehouse view, and if the conditions are met, then the green lines will generate also. But I like to use this one because I can apply these charts both up and down to any stock to see when the conditions were met. The whole theory, or the theory that I'm using, is demand and supply. There's more demand than supply. There's more effort versus result, and so on. These are Wyckoff characteristics. So if you see a lot of demand and it's going up, and then when I add the VPA to it, then we have more confirmation. So this is new. Like I said, this is experimental. And I have the same thing with the ETFs, but I want to take you through this. Okay, first I want to go back to the money flow. Now, this is the intraday money flow. This is the end of day. Maybe I should have reversed these two folders, and I may do that in the future. But I was working on the intraday first, and then I added the end of day. But let's just look at the end of day money flow here. Now, I want to point out that if you go to your warehouse view, and this icon right here with the pencil, if you click on it, it's going to open up this window, and on these money flow indicators I have entered comments telling you what these scans do. The reason I did this is because there's a lot of scans here. It can be confusing, and I want to give you a short, commentary on what each done. This scan measures money flowing into all stocks. The stocks must be at least in the upper one half of their trading range, or the end of day range in this instance. And the sort is on the industry percentage price change. So you can see that last night at the close, there were 377 stocks that passed this. Not a tremendous amount of stocks, and the reason is the requirement of being in the upper 50 percentile of the range eliminates a lot of stocks. So the industries, you can see the sort is on the industries: educational services, semiconductor, manufacturing, and so on. Let me make this full screen and you can see it better. But these were the groups that were up and the stocks that were up. Notice that the percent range, it's all green or yellow. There's nothing down in the red. And here's one at 51.55. It passed the criteria in the bank. So let's compare this. Bring this back up to down, 377 up, 403 down. What did I see when I looked at the NASDAQ composite? The negatives, or the stocks that were down, were slightly greater than the stocks that were up, and we're seeing the same thing here. So you can get an idea of strength right here. Now, if you want to look only at stocks that have weekly options, just go here, 46 up, 27 down. But these are stocks with weekly options. This scan references my user smart groups. Not my user smart groups, I'm sorry, the custom groups with these two folders right here. It's referencing these, so it's looking for stocks with options. So if you're only interested in trading stocks that have weekly options, this is the scan you should look at. And like I said, 46 up, 27 down. Money flow in. This one right here, SP sector stocks. If I click on this, it opens this window. This stock measures money flowing into the S&P 500 sector stocks. The stocks must be in the upper one half of their trading range, and so on. The sort is on the industry percentage price sheet. So these are the big dogs, or the S&P 500 stocks. The filter goes directly into these S&P sectors and pulls out the individual stocks. This is what I want to look at this is what I look at when I really want to see what the institutional traders are doing, because they're trading these S&P 500 stocks, and you can see, looking down at the industries here, banks, semiconductor devices, and so on are near the top of the list. Look at the names here: Seagate, AMD, Analog Devices, Microchip, NXP, and then we get down, there's one casino and gaming and so on. But this one goes directly to the S&P 500 stocks. How many were up? 57. How many were down? 65. That's pretty much what we saw with the broader market in the NASDAQ. Now, this one I included ETFs also. And the reason I did that, I wanted to see the stocks, and I also want to see what the ETFs are doing. So if you look down here, the sector or the industry group, if it's blank, that means it is an ETF. Now here, the consumer staples yesterday were up 1.1%, closing at 79.25% of their daily range and above average volume. Now yesterday on the intraday, that was showing up on the intraday scans. Okay, moving on. Up and down, and then this apply this money flow here to the industry groups. So if I go to the industry groups, and it's going to Let me get in here. I have rebuilt the industry groups this morning, so this reflects what the industry groups are right now. 104 up, or as of a few minutes ago, and only 67 down. So it's showing the strength in the industry groups. You can do this at the end of day or intraday after you rebuild the industry groups. So that is the end of day scans. Now I'm going to switch over and I'm going to go into the intraday. We want to see what's going on intraday. Now, to make this video, I am using manual updating just so it doesn't drag the video down. So let's update everything. As I'm doing this, the composite is up 144 points today. So the bull run continues. Okay, that's updated now. So let's just move up to the intraday. Now I've done the same thing here. You see I'm in industries. I'm going to hit my alternate space key, or I could have just gone down to all securities. And then I have to reapply the filter. So, same criteria. These stocks have to be above the midpoint of their daily range. They have to be positive, and you can see that they are trading above average volume. So what do we have here? We have 346. If I click on this, here's an explanation right here, and it tells you to rebuild your industries intraday just like I did, and then you will get a correct number over here. And let's go up to the top here. You can see that I didn't go to the top. I thought that was strange. Okay, here we go. Electrical components. I'll make this full screen so you can see it. Semiconductor manufacturing, marine shipping. Marine shipping stocks have been strong. Banks, coal operations, and so on down the list. You can get a quick read right here by clicking on the industry and the spectrum analyzer. Now what I like to do is I like to have a secondary sort. I just type range in here, and I use intraday range on this. And what this does is it lines these stocks and groups up based upon where their current range is. So in semiconductor manufacturing, Richardson Electric is trading at 88.46% of its daily range. And so you can see all these numbers are descending down from here. So let's bring that stock up, and let's just look over here. You can see that back here these conditions were met where volume was above average. There were VPA flags, and we're not seeing that yet. This stock fell down sharply. We're not seeing the big, well, we may have the volume today, and there are VPA. So if this closes above the 90-day moving average, more than likely a green bar is going to be generated on this stock. Let's just take a look at APH and see what this chart looks like. Okay, this is APH. Look at this, a gap up today. But the conditions were met here. I'm going to bring up, let's get an arrow up here. You can see the blue here. The three bars were above the 90 period. That coincides with the green bar right here. Here is a VPA flag. There's 3 VPA signals right here within a 4-day window. Let's go back here and look at this. You can see the 3 was below the 6, but here was a stopping volume. So there was a green bar because these 2 bars were above average. These 4 bars here were above the 90 period moving average, and here's a VPA flag here. So consequently, green bar. VPA flags here and here, volume above average. There's more demand coming in. Same thing here. 3 bars above average with VPA flags within the windows here. So you can see this worked really well on this stock. What was it down here? It's about an $80 stock. Now it's well up over $100. So this chart will tell you where the demand is based upon Wyckoff principles. I haven't mentioned the weekly chart yet, but I like to leave the daily chart or a daily chart and a weekly chart up here. I'm using a white chart because I'm using white over here. I thought it would be too contrasty to have a black chart and a white chart, so I'm just using a white weekly chart here. You can see how strong this stock has been on the weekly. A little shakeout here, and then a reversal to the upside. This was the shakeout here on lower than average volume, so no reason to panic. And here it took off. Okay, let's move back over here. And this is industries up. This is the same group of stocks. You can see, if you look over here, 346 securities intraday. And this is sorted on the industries. If you want to find the stocks most in demand, just click on 1A. And here CXDO now comes to the top. Let's take a look at it. The volume was very high yesterday. The spread was wide, but it closed in the middle. It crossed 3 across the 6 12 days ago. VPA crossed 10 days ago. Relative strength is 99. Days high is high. It's hitting a 615-day high. It's only a $7 stock. Let's take a look at it. And you can see that it wasn't meeting the requirements. Now this stock did not generate a green bar back here, even though it looks like all the criteria was met. And why wasn't it? Well, because you come down here and you'll see that it's only trading 121,954, and I've got a minimum of 100,000 shares in my filter. Now, if I eliminated the volume requirement, there would be all kinds of signals on this stock. And maybe I should do that. I just really don't like to look at stocks that aren't trading at least 100,000 shares. It is right here. That's why we're getting the green bars, because of the VPA requirements and the volume spike. But in through here, it should have generated, or it would have generated if the volume had been lessened. I'm just going to do this. I'm going to edit the indicator, visual filter back test, go into the filter, edit the filter, 90-day moving average volume. I'm going to make it 1. And click OK. Says this is not valid for backtesting, and I'm not backtesting, so it doesn't matter. So I changed that to 1, and look at all these signals that were generated here because the other criteria was met, above average volume. Now, maybe I should just do a scan with the volume parameters not included. I'll think about that for now, but I'm going to leave it at 100,000. I just want to explain to you why this didn't generate the signals, because the volume requirements were too high. Okay, I went back and changed it to 100,000. But if you see a chart where it looks like there should have been signals generated, the first place you have to look is at this 90-day moving average volume, or column right here. Now I'm going to quickly go through these. As you can see, I have put comments in all of these money flow. I'm just going to go down here, these are industries down, sorted on the industry. These are stocks down as of today. 295 compared to 346 up. So we've got a bias to the upside, of course, on a strong day like this. But let me just point out quickly, these are box stocks. These are the sector stocks, money flow in. Let's just look at that. You can see semiconductor manufacturing is up near the top, and banks. Here's semiconductor devices down here. 55 on the upside, on the downside 42. And this, I can see there's a filter I need to modify because it's letting the ETFs in. I'll do that right now while I pause this. Okay, I fixed that. Here's money flow out of the sector stocks. This one contains the ETFs. You can see some blank over here. The semiconductor ETF is in here. And this is on the downside, including some ETFs. I just like to compare the stocks to the ETFs. That's why I put these in here. These two have money flow in and money flow out in stocks that have weekly options. And then here's the industry groups. If you change the industry groups, you can have to rebuild the industries and see what they're doing. Okay, so that's the money flow in and out right here, and I have labeled all of these. Let's make sure that I did that. Click on this. Yeah, I put the comments in here to help you to avoid confusion. Now let's move on down to these experimental scans. This is something that I came up with last week. End of day up. VPA has to be within a 4-day window. Strong volume, in other words, above average volume, and it's sorted on the industries up. So looking over here at the industries, you can see that these go in descending order. Let's look at, I'll just start at the top, and let's take a look here. You can see when the conditions were met. Let me get the pointer out here. Okay, let's go clear back here. You can see a VPA flag. You can see above average volume. Blue area in here. Didn't do anything. This one, blue bar, couple of VPA flags, green bar because above average volume. Another instance right here of above average volume, but it didn't signal. I'm going to click on here. You can see this is a stock that's volume is not consistently over the 100,000 shares there. It wasn't back here evidently. If I click here, you can see the volume on that day was 107,000. So it must not have been averaging over 100,000 during this time period. That's why we didn't get the green bar. I may have to rethink that number, but all of these other instances it occurred, there was enough volume to generate the signals based upon this. If I click on this period right here, you can see the volume on that day was 787,900. So volume started coming into this stock, and look at all these great signals here. Here's one right here just a few days ago on the 12th of January, and it was trading for 1256. What's it trading for today? 1408 right now. So good signals there. Let's look at this one. I'm not familiar with this stock. Look at the volume. There's plenty of volume here. Here's the average volume on the current stock. It's currently 220. So down in here, there just wasn't enough volume. This one, let's look at it. You can see all the criteria was met here. Got ahead of itself, came back down, signaled here again, didn't go anywhere, and we're getting another signal yesterday. Let's find a stock that we're familiar with here. ASML. High, above average, very high yesterday. 4 days ago, the 3 crossed the 6. VPA crossed 5 days ago, RS of 84. 514-day high. You have to always add 1 to that number. And here you can see the volume, semiconductor manufacturer. Let's take a look at this stock. So you can see back here where the first conditions were met, trading well above, or trading above the 90 period moving average. This is such a huge volume spike today. This is on earnings news. Buyable gap if you can afford a $778 stock. Here's a relatively familiar name. You can see it only trades 183,000. Let's take a look at it though. Look at all these good buys in through here and then all of these here. These are not good buys, but it was in the downtrend. The 3 was below the 6. You can see that. It's always tough to buy those when the 3 is below the 6. Same thing here. It did go up, but it was a failure. And it came back down. It didn't generate any signals till here. These signals are not all going to work, but this, I'm encouraged with this because it shows me stocks that are really in demand. By the way, it has a comment on these. These are stocks that meet the requirement of VPA flags within a 4-day window and also above average trading volume. Right here's a column, by the way, that says days since the last signal, and you can see that these are all within the 4-day window. Now I'm going to go from the end of day to the intraday. Now what the intraday does, you can see there's 319 on the end of day. The intraday takes that same list, but these stocks have to be up intraday. So my purpose here is to locate the end of day stocks which generated a signal, but eliminate those that are not positive for today. So CXDO, this is the same one I looked at earlier but didn't have enough volume. Let's look at Textron. TXT, here's your signal yesterday, and let's see if this is an earnings. Yeah, 124 earnings today right here. But there were buyers coming in yesterday. Even though it was a black candle, it was positive, and volume was slightly above the 90. I don't know what Bullfrog Holdings is. Let's look at East West Bank Corp. Here was your signal yesterday. After a slight gap down today, it's moving up. Look at all these buy signals here. Now the combo here is effort versus result, which looks for stocks that are moving up sharply in their upper end of their trading range on heavy volume. So the demand is really in the top stocks. Now I'm not requiring that the intraday volume be above the 90 here. I wanted to just find stocks that were following through, trading on the positive side, and they don't necessarily even have to be at the top end of their range. I didn't want to eliminate too many stocks. I did want to find the stocks that are up for the day, and let me sort on this. You can see these are all up for the day, even though just slightly, but you can also see that their ranges are not near the top of the list. But when you sort on the raw combo, it's going to bring the stocks that are following through with the most demand to the top of the list. And then we get down to the bottom, you see a lot of red here on the intraday ranges. Remember, these are experimental. I may change this. I could quickly go in and I could edit this, and I could, this was, I could make this intraday range. Whoops, wrong one. Intraday range greater than 0.50, and we would go from 138 stocks down to 89. And that's something I may do. In fact, I think I will do that. I'll change the filter and upload it to this. So the intraday range is going to be 50. I'm not going to require that the volume be above the 90-day projected volume. So let's just do that, and that cuts it down to 89 securities. And now when you look down at this intraday range, you won't see any red here. So it's the same list of stocks from yesterday, or from the end of day. And there were 319 of them, but following through on the intraday up, they have to be have a positive number, and they have to be in the upper part of their trading range. Now, I need to go in and I need to do the same thing for the down side. I'll do it down here. Intraday range less than 50. Okay, so these are stocks that were going down yesterday based upon the same criteria. Okay. Let's bring this up. And so 264 were down, but only 82 of them are down today with ranges under the 50% mark. So these are the ones that are really continuing down intraday. Now, when we use the downside, I'm on chart number 10 right here. Just go to chart number 11 and you'll find just the opposite. You'll heavy volume with a down day with a VPA flag within the 4-day period. Now, I don't emphasize down much because most people that use the software are long side traders. So I'm just putting my emphasis on the long side. Once again, now I have to go back to chart number 10. And then end of day, intraday. So let's take a look at that Bullfrog Holdings. It's a biotech. And here it is. Conditions were all met right here to $3.30. And look where it's trading today. So it really picks up on the demand. SPNT. Right here is your demand above the 90-day moving average with VPA flag within a 4-day window. Remember, this is experimental, but I like what I see so far. And then here's the same thing with ETFs. You can see the ETFs are in here on the end of day. And then here's the intraday. On the intraday, I didn't require the midpoint there to be above 50. but I might as well be consistent, so I'll go in and change that right now. So there's, in the ETF, there's 20 securities that are up, holding above their midpoint range. And I'll pause this and I'll go ahead and do the same thing for the down. Okay, so those are fixed. Anyway, there's descriptions in here also on these. I want to emphasize that these are experimental, but I think this really gives us a great insight into when the demand is coming in, and then combined with VPA, I think you can locate some real winners here. Now before I end this, let's just take this chart right here and let's put some familiar names in here. Here's Amazon. Here's a signal here. Here's a signal here. Here's a signal here. It pulled back, but then worked its way higher. Here's a good signal here. Let's take a look at AAPL. I haven't looked at these. These are all good signals here. This doji right here signaled a turn. It went down. And then just the other day, you can see the demand coming into Apple. And it really hasn't looked back yet. Let's do INTC. There you go. How about NFLX, which had a big day today? You can see it signaled yesterday above average volume going into earnings. I think some traders may have had some information about that, or certainly a good feeling, and you can see what happened. What else is there? Meta. This is interesting. You can see that really, well, here's a blue bar here and a blue bar here. But remember, these blue bars are based upon the pocket pivot formulas. And even though the blue bars are there, the volume was below the 90-day moving average volume. And I'm using the 90-day moving average volume as my criteria. So if there is a pocket pivot signal, but it's under the 90-day moving average volume, I'm not considering it in these filters. Now, that may change. I don't know. But I'm just working with it right now. Like I've emphasized, this is experimental. Okay, let's see. Let's go into the top 50 group inclusion report for today. Let's just look at a few of these and see when they signaled. Look at all the signals on here on the top 50. That's an inexpensive stock here. Here's Akamai. You can see a lot of good signals here. Lots of signals here. You really need to take the weekly chart into account and also the relationship to the moving averages to see if the fan is up or down. If you're buying a stock like this where you're getting signals, just realize where you are. You're in a stock, buying a stock in a strong downtrend, and you just have to be aware of that because it's got to get through a lot of overhead resistance to really make any progress. Let's see, here's NVIDIA. This is in the top 50 again. And notice that throughout this time period here, there were no signals. And then when it broke above here, there was the first signal because of this heavy volume and the VPA flags. And where did that signal occur? It closed around 5. Well, the high was 522.75. It closed at the high. And where is it today? It's at right around 620. So big move here. Yeah, expensive stock, but in retrospect, you put a bull spread on here. When you get that signal, you'd be well into the money. It'd be a highly profitable bull spread. Now let's zoom out on NVIDIA. Okay, this I only have this set for going back for 1 year, but look at all the good signals back here. Here was one that had a little run and then pulled back. Here were some more signals, and then through this whole period right here, there weren't any signals. Okay, a lot of familiar names in here. I'm going to do one more stock. I'll just take one at random. How about Shopify? And let's see what it did. Strong weekly chart here. Look at all these signals here. Nothing recent, but there were plenty of buy signals here. Here's VPA flags here, but we didn't have the volume. Let me put a crosshair on here. You can see the volume got above the 90 there. So why didn't it signal? Because this volume bar is not higher than these 3 down volume bars. That's where the pocket pivot criteria comes into it. Now, if I was just using 90-day only as my trigger, it would have triggered, but I'm using the pocket pivot bars right here and the criteria and the filter. That's why it didn't signal. Like I said, this is all experimental. I may make some changes. Anyway, I've droned on long enough. I hope you find these useful. And if you have any questions, just let me know. Thank you for listening, and I hope you enjoy these scans.